Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Nikkei, that's managing to hold on to gains of 0.5%. ASX 200, that's the Australian index, is also quite muted, but slight bit of a positive bias there.
Support stands at the 20-day, which is 24,832, and the lower end of the range which the market has been in, which is 24,500. It's absolutely flat. So blinking red and green, at least on the Nifty. It's more, actually not really definitive on the Nifty Bank as well. So it's flat actually on both. So 24,930 on the Nifty.
So for now, RINL till now has been a success.
All eyes on the Israel-Iran talks and what the America role would be out here itself.
The markets are on the edge, not just the Indian markets, but global equities across the board.
The broader markets, when you look at the advance decline ratio, that is largely in favor of the advances.
SEBI is likely to come out with final regulations on allotting expiry days out of Tuesday and Thursday to NSE and BSE today itself.
Okay, that is the day so far, and is it a consequential day? Is it an inconsequential day? It's actually neither. It's neither here nor there. It's about 0.4% lower, so really no big signaling through the course of the day is what we've had. Market breadth is slightly negative, and I think much of the discussion, of course, will be on single stocks. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. Nigel with me. Nigel, hi.
Well, that's right. I think the breadth of the market that's got increasingly negative from the start of trade, I think that's what's not making portfolios feel very, very good. And now I don't know whether the street should be hopeful as well of getting a resolution in the near term, because overnight, there was some positivity. But otherwise, the soundbites that have come out have not indicated much in terms of a de-escalation between Israel as well as Iran. And that's the next big trigger in terms of a leg up for a year for the markets. But if you had to say that crude oil prices spike so much and still the markets are still around that 24,800, 24,900, I think the bulls would take it.
No, absolutely. And it also take the fact that oil prices are not up more.
Yeah.
They're kind of sort of contained for the last 2 days. The initial spike happened, but after that, not very much at all. It's 24,860 or so as far as the Nifty is concerned, which is actually, I think, pretty close to its 20-day moving average. So let me just actually pull that up. Where is the 20-day exactly? I think we are exactly the 20-day right now. So 24,841 is the 20-day, and we are basically about 15 points away from the 20-day moving average. Well, the news flow doesn't stop. Look at the flash at the bottom of the screen. Trump says pharma tariffs are coming very soon. So there is that. The sectoral tariffs, remember, that's they're being imposed under a different section, and they're not covered by what the court remember the court system blocked the tariffs, and then there was a stay on the block, which means that they're still effective. The case perhaps goes to the Supreme Court, but these sectoral tariffs, pharma, etc., and everything else are being imposed under a different section in the US. Stocks, I think, are taking a bit of a leg down very clearly. Dr. Reddy's is down 2% very sharply, suddenly. Lupin is down about 3%, and I think many others will come up on your screen as well, which are down. Cipla is down about 1.75%, and so on and so forth. I remember we had a discussion with the Lupin management sometime back. This is early on. And what he had told us is that, we basically, in terms of the US imports which come through, drug imports which come through, it's about $700-800 million or so, on which there are about 10% tariffs which we impose. So I remember Mr. Swaminathan of Lupin's point was that it's very easy to kind of negotiate on that. If we wanted to, we could give some concessions because it's not that large an amount, etc. But who knows? We'll have to take it as we seek. We'll try and get Winnie up on this as well, maybe with some feedback from analysts, etc. But that's the latest which is coming through. Nigel.
Well, that's right. Well, let's get in Mitesh to help us out with how do you position yourself at the final hour of trade. Hi, Mitesh. Good afternoon. We've come off the day's low, actually. We're sitting with a cut of around 80 points. Today, the problem is the mid-cap index has taken a harder knock. What's your view in terms of trading action? What are the goalposts you're looking at on the Nifty first? And then if you could give us your individual picks.
Yeah, nice. So in the last 3-4 hours, it was a very quiet market. We kind of declined from 24,900 to about 24,820 and then bounced back to about 24,870. So contracting market. My still belief is that, that we are basically going through some kind of consolidation between 24,500 to about 25,000, 25,050 on the upside. And that remains the range in the short term. We had that brief move beyond that range last week, but then that kind of was immediately taken out. So we assume that the range is in place. Also, the volatility indicators are shrinking. So not much sign of a traded move is there. And therefore, you must believe that till you get some kind of a signal, I think the market is ranged.
Okay, all right. What about individual stocks?
So I think Nifty IT is an index which is looking interesting to me. Infosys is one stock which was a buy a few days back as well. Now it's showing some continuations. So buy in the stop at 1625. Look for a 1680, 1690 kind of a target over here. And I would sell on Jindal Steel and Power with a stop at about 910, 911 for targets of around 865.
Now, okay, got that. By the way, the move in pharma, we should maybe just look at it. Nifty Pharma Index per se, if you have a call or anything out there in terms of stocks, any view?
On the Nifty Pharma, my belief is that a lot of signs were positive. And I think, yesterday and today we've got some kind of a negative outlook. In fact, today I had a sell on Lupin. I think the Sun Pharma stock is also showing some kind of a negative trend. So I think pharma is just showing first signs of profit movement correction. If you look at the Nifty Pharma per se, I think the breakout should have happened about 22,100. We did get there on Thursday, but then we didn't close and close below that. Then the follow through is missing. So I think the bigger support is at 21,300. So I think it's a market which is between 21,300 and 22,100. And only if you get past 22,100, we'll turn positive again.
All right. Also, I wanted your view, Mitesh, on Mazagon Dock. That stock is up close to 4%, one of the top winners in the F&O basket. And also, I'm just looking at some probabilities with regard to the next MSCI inclusion. That will be announced in early August. The cutoff date will be in July. But for the time being, the street is anticipating that going by current calculations, Mazagon Dock could come in, which will lead to some MSCI flows. How is it looking at the charts, though?
Well, I think the stock went to about 3770 during the last week of May, and then went into correction. It's bouncing back, but I'm not sure of a trend reversal. Maybe it's a bounce back with some anticipative news which could take it to about 3470, 80. In case there is some actual good news, the upthrust could even extend about 3600, 3650, but I'm not sure of moves beyond that.
Got it. Okay, all right. Got that. Thanks a lot, Mitesh, for joining in. We'll come back to you for a fresh call in terms of the markets at around 3 p.m. today. But let's focus on Siemens. That stock is gaining on the back of a big order win. Vamakshi joins us to tell us why is it important for the company and with the further details. Vama?
Well, Nigel, Siemens Consortium has been awarded a contract. This is from the National High-Speed Rail Corporation, and this is for the Mumbai-Ahmedabad bullet train project. The order is valued at 4,100 crores, and out of which Siemens limited share stands at 1,230 odd crores. Now, it is important to note that largely the news was known. It was published, in a report. It was declared as an L1 bidder a month ago, and the LOA came just a week ago. So largely it was known, but it was declared on the exchanges today. So therefore, we're seeing an uptick in the counter. The scope of work for Siemens includes providing design, installation, as well as long-term maintenance of advanced signaling and telecommunications tech. The project will be executed over a period of 54 months, and Siemens has a contract which is a maintenance service contract for the next 15 years for the same. So it's a big contract. Nevertheless, 1,230 crores for Siemens. The stock is certainly seeing an uptick today.
Okay, all right. Thanks a lot for that, Vamakshi. Well, Ashish Chaturmurtha, MD and Fund Manager PMS at JM Financial, joins us on the show. Hi, Ashish. Good afternoon. Good to speak to you after a while. What's your view on Siemens?
Good afternoon, Nigel. Thanks for having me on the show. So, Siemens obviously is a very big beneficiary of the entire capex cycle which we are witnessing. If you look at the gross fixed capital formation as a percentage of GDP, which is currently around 32%, is going to go to almost the peak of 2008 levels, which is close to 36. My sense is Siemens obviously into railways, into power, into a lot of high-end technologies is going to be a biggest beneficiary of the trend change which is happening in the entire capex cycle. We firmly believe, and this is a stock we have been holding in our portfolios also for a reasonably long period of time. My sense is this is going to be very positive, and in the next couple of quarters, we expect the earning growth momentum to be very strong, not just for Siemens but also for players like Hitachi Energy, ABB, and we continue to hold this stock. And I think this looks quite positive as a news flow for the stock.
Ashish, good afternoon, and good to see you in your new avatar. Congratulations! I think we're speaking for the first time with you in this role. Is it time to be a little cautious overall markets? Ashish, what's the broader overlay?
Thank you, Prashant. So yes, I think a little caution is definitely advised, because when we are looking into the geopolitical instability which is there, plus there's a lot of tariff-related risk which is still hovering around us, and we have seen a very significant jump in the crude prices in the last couple of days. Although yes, Iran has almost a production of 3.4 million barrels per day. But if you look at the export numbers, it is close to 1.5 million barrels per day. Now, even if there is a risk, it might get hit to the extent of maybe 0.5 to 1 million barrel per day. So that has a limited impact of maybe 5 to 10 rupees jump in the crude prices. But if you see that in terms of the trade routes, if it gets impacted, then definitely crude has a significant upside risk. And if it happens, it can definitely impact the fiscal position we have to face. And with the kind of uncertainty we are dealing with, tariffs, with geopolitical risk, it looks like little, one should be a little cautious. At the same time, if you look at the small cap or mid cap, they are trading at good 20% premium to their 5-year, 10-year averages. So that comfort in terms of valuation is a little missing. So what we are advising, or what we are doing in our portfolios, is we are very, very selective in terms of our approach, where we are seeing very strong earning growth momentum going to get up in the next 2 years time frame. Those are the places where we have concentrated our position, rather than a very broad based kind of selection. So like, we are very positive on, we have been very constructive about defense for a reasonably long period of time. We continue to hold the position. We like CDMO as a great opportunity, because that's a space which is going to grow at 15-16%, and there are individual stock where the growth could be about 20-25% because of the strong capex these companies have done. So very selective opportunities is what we believe. But yes, at a broader level, some caution is required at current juncture.
All right. Thanks very much, Ashish, for that. Just coming back to you with a specific stock-specific question, really. This is a CNBC-TV18 exclusive, and this is something we've reported on in the past as well. My colleague Yash is joining in with what he's picking up with regards to the decision on expiry days for exchanges. Yash, tell us.
Well, Prashant, there's been so much discussion on this, right, in terms of whether Tuesday would be allotted to NSE as its weekly expiry day or to BSE as its weekly expiry day. Remember, we had reported earlier as well that NSE had applied for Tuesday to be given as its expiry day, weekly expiry day by SEBI. After that, of course, SEBI came out with its consultation paper, and it has been talking to exchanges. But the fresh update that we've been given to understand is that the final regulations on who gets Tuesday and who gets Thursday as their weekly expiry day is expected to come out today itself. SEBI is likely to have made a final decision in terms of whether to give Tuesday to NSE or BSE at its expiry date, and this holds a significant importance. We've discussed this in the past as well in terms of how Tuesday becomes a lot more beneficial as an expiry day to exchanges. But of course, the big story is that SEBI is expected to come out with final regulations today. NSE has applied it before, and we had reported on May 22nd that SEBI was in the process of considering NSE's request in terms of allotting it Tuesday as its expiry day. The final call, nevertheless, is expected to be taken today.
All right, Yash, you're going to have a late evening, looks like. Thanks a lot for joining in and giving us that information with regard to that exclusive. Ashish, what do you make of this? BSE has defied gravity. You know, if I look at it in the last 6 months, 1 year, 2 years, 2.5 years as well, it didn't move for a long period. And the last 3 years, it's made people very, very rich. It's already corrected 10% from the top. But if in case they don't get the Tuesday that they currently have, and if it's shifted to Thursday, that could result in some market share loss. What is your view on the stock in the backdrop that it's not trading cheap at all?
Yes. So on a trailing basis, yes, Nigel, it's trading at 82 PE multiple. We have been riding this trend for a very, very long time. And in fact, couple of days back, we finally, decided to take an exit in BSE. The reason being because there is a lot of uncertainty with regards to this expiry day, and I think it will definitely impact BSE in case if the Tuesday expiry business goes to NSE. Already we have seen very significant drop in terms of the volume, in terms of the overall average daily turnover numbers have come down for BSE. And in case if Tuesday expiry goes to NSE, then we think that the market share loss can happen to BSE, which has gained almost double-digit market gain in the entire derivatives market. So if that happens, then definitely some shorter-term correction could not be ruled out in BSE.
Okay, all right. Cut that, Ashish. I wanted to ask you about a couple of metal stocks, but first up, let's update our viewers with regard to the news flow on Hindustan Zinc. They finally announced the phase 1 of their growth capex, where it plans to expand the refined zinc capacity by around 250,000 tons per annum. This along with matching mining capacities, which is targeted to be completed within 3 years from today. And in fact, the total capex that they've earmarked for this is around 12,000 crores odd. And they've mentioned that all of this will be funded by a mix of internal accruals as well as on debt. Let's tell you a little bit more. Now, the rationale for the capacity expansion is likely to see, because we're likely to see a big growth in zinc consumption, which will be driven by strong demand in steel as well as infrastructure projects. Now, post the completion of the phase 1, capex that they've lined out, the total refined metal capacity will move to around 1.379 million tons, and the refined silver capacity will move to around 830 tons per annum. Phase 2, that will take the full refined metal capacity to double to around 2 million tons, while the silver capacity will move from this 800 tons odd to around 1500 tons. Now, why is this positive? It's positive because Hindustan Zinc delivered a refined metal volume CAGR of sub 2% over the last 10 years. And it's already operating close to around peak capacity utilization levels. So because they have announced this capex, it will provide some kind of visibility with regard to growth from FY28 onwards. But the problem is that the stock is trading expensive. It's at around 10 times on a forward EV upon EBITDA basis. And also there's always that fear, right? When the stock is trading expensive, you have two large players in there, two large holders of the stock. Vedanta, which is its parent, as well as the government of India, they could look at paring stake at these elevated valuations. So the big expansion has been announced. The problem is the stock is not cheap and there's always that supply overhang. What do you make of it, Ashish? Hindustan Zinc, a view on the stock? It's a very volatile one. It goes up 5 to 8% in a single trading session, comes down as well with the equivalent velocity. But your view on it, and what would your take be if you want to play Hindustan Zinc? You rather play Vedanta, more liquid, it's got the demerger trigger as well, and valuation much cheaper.
So metal is always a very tricky place, Nigel, you know that, because of the volatility which we see in terms of whether the raw material prices or eventually the realizations. And that always keep us on our tool. whether we want to have a metal exposure. And if we really want to have a metal exposure, then we would like to have someone as an integrated play where they have good control on the mining assets, and along with that they are doing some value addition. That's the reason, at this point of time we don't have exposure to Hindustan Zinc. But yes, one thing is for sure, if we look at Hindustan Zinc currently, it's giving a dividend yield of close to 6%. It's trading at on a forward basis of 10 times 11 times EV EBITDA. If you look at in terms of earning growth, we expect that the zinc's volume growth is going to be very good, and because the rising silver prices is also a very good positive trigger for Hindustan Zinc. If you look at from a stock perspective, stock has underperformed the entire metal basket in the last cycle. So keeping this in mind, my thought is the downside is limited. Maybe a tactical bet on upside could not be ruled out, where the stock can reach to almost 12 to 13 times EV EBITDA, which might give a decent 30% kind of upside from 25 to 30% kind of upside from current levels. But I would think it as more as a tactical bet. What we have been holding on the metal as a space is Lloyd Metals for a reasonably long period of time, because this is a stock where we have got very strong mining assets, plus the realizations has been continuously going up. So that's a bet we have been holding in our portfolios. Hindustan Zinc from a tactical perspective looks interesting.
Got it. Okay, all right. Lloyd Metal is something that you like, and in fact the other Lloyd Group stock as well, which is Lloyd Engineering. They are the ones that will be involved in that capacity expansion for Lloyd Metals as well. So maybe keep an eye out on that one as well. Thanks a lot, Ashish. To speak to you, we look forward to chatting up with you more often. For the time being, we slip into a short break, but on the other side, we have Rajesh Kothari, who's waiting for us.
Okay, welcome back. Markets, of course, down 100 points, but they've been holding on in that position for a while without too much of a recovery or additional sell-off as well. Rajesh Kothari is now with us of Alpha Accurate Advisors. Rajesh, good to have you with us here as always. Thank you very much for your time. Just before you came, Rajesh, this news came again. For the nth time, I think, Trump is going to impose pharma tariffs. Pharma tariffs are coming soon. But, but whenever I've asked all these conferences, we had the Morgan conference, BofA, and the global analysts were here. And I remember asking all of them whether the sectoral tariffs are coming. And all of them actually said yes, because they are under a different section or whatever. So, I mean, they are going to be imposed on a variety of things, and pharma is one of them. Any thoughts on the space, Rajesh?
See, basically, you are absolutely right. So when you think from the US perspective, from president perspective, he is comparing the US rising of the products compared to the patented products in the Europe region, be it Germany, be it France, or any other country. And there's a huge gap in this, correct? Because the pricing in US, that products are significantly higher than the same products in the European markets. And therefore, this entire concept of tariff. So, tariff is not on the generics or only keeping in mind India. It is more to do with the global countries in which these similar products are available to their citizens. And that's where this tariff is going to come to make sure there is a level playing field. Now, coming to India specific, we are more into generics market, correct? And here there is significant amount of, I would say, capacity consolidation has happened over last 5-10 years. Because the competition was intense and there was a huge pricing pressure. So there is no significant capacity addition by any major countries. In fact, if you look at the number of sites, they've actually reduced in last 10 years. So I'm not too much worried about as far as Indian pharma companies goes in terms of our generic pricing, in the US market. So let's assume hypothetically, there is about, say, 10% price increase from the Indian company's perspective. Surely it will not be 100% will be absorbed by Indian company. It might be 1/3, 1/3, 1/3. Like if you speak with any of the textile company in India, they also say the similar thing. 1/3 is to be won by the consumer. 1/3 is to be won by the US player, the particular manufacturer, the brand, and 1/3 might be absorbed by the Indian companies. Now, of this 1/3 which is to be consumed by the Indian companies, there is basically roughly about, say, 200-300 bips kind of impact on the US business. To offset that, of course, there are again levers to be used. Can there be some product mix changes? Possible. Can there be cost reduction programs? Possible. Can there be more kind of a raw material related cost benefits? Possible. So net impact is not going to be significant. There will be some impact surely. Maybe 2-3% plus minus EPS is possible. But I don't see a significant major damage to the Indian pharma companies because of this Trump tariff.
Hi, Rajesh. Good afternoon. Good to see you in. It's been a while since we spoke.
Hi.
Rajesh, I wanted to ask you about another theme. That's the tech pack. If we plot the distance of various indices away from its recent high, well, the tech pack is still a distance away. That's because of the uncertainty on Trump. The argument that maybe in the next year or so, the growth is going to be still very anemic as well. And valuations are not particularly cheap to some part of the street. But that index has been actually the best performer in the last 4-5 trading sessions. Even today, it's doing quite well. How are you all placed on tech and what do you like?
Well, I think you have summarized it well, that, this entire tech pack is, first of all, it is a more linked to the US economic growth. It means you need to predict the US inflation. It means you need to predict the US BFSI and non-BFSI total technology spend. And of course, that picture is right now not much brighter. Now, there is a hope that second half is going to be better compared to what we are seeing in first half. But increasingly, even this second half is not going to be so bright spot. It is going to be from probably, poor, it will go to average. It is not going to be good. There is a hope that FY27 is going to be good. So there are a lot of, I would say, assumptions which are getting built in. Having said that, for Indian IT companies, the valuations, people look at from the dividend yield perspective, the free cash flow yield perspective, because they throw huge cash flow. And therefore, that acts as a downside support. So I would say it is going to be a very, very narrow band. If you ask my personal view, we are not too much excited. We are a little bit underweight on this theme. Not too underweight because of that. Some valuation cushion is always there. And as and when US enters into the printing cycle again or interest rate reversal cycle again, that's where the US economy growth will bounce back. And that's where IT spend will also, to a certain extent, bounce back. But if you look at the last 10 years, the top mega companies, IT companies growth, be it earnings growth or be it a revenue growth or be it a market cap kind of thing, it's around 10-12%. So these are like 10-12% stories as far as large cap goes. So we are focusing a little bit on the tier 2 players where there is a more visibility. They are working more on AI, they are working more on cloud, the new technologies, and there is some M&A which has already happened in the last 2-3 years. And therefore those companies probably can grow at 15, 17, 18%, which is definitely much better than 10-11% growth, what the top 2-3 companies offers. So nothing to be too much excited about. Yes, I understand last 4 days they are performing, because you must remember that before that they underperformed, because before that there was something else which outperformed. So this weekly performance keep changing, but nothing much to I would say to get bull about it as on now basis. We'll keep reviewing.
Again, as you were coming on, Rajesh, we just got the news that CG Power has got an order, transformer order. That's a space that you've been very bullish on. I mean, I think Hitachi has been one of your top ideas there, and it's done very, very well. I think there was a note on, again, in the industrial space, Schneider from one of the brokers this morning, something we've been highlighting. Anything new there, or holding on to the same set of names which have done well?
I think nothing much new to talk about. I think this entire space looks quite exciting. It is a much more, I would say, 4 or 5 year thematic in terms of the tailwinds which are going to support you. So look at in this market, what you need is you can't predict this Israel, Iran, and all that stuff, and Donald Trump daily Twitter. Very difficult to position your portfolio on these tweets. But what is more important, therefore, you increasingly look for that your short term, medium term, and long term, 1 year, 3 and 5 year, the theme should be in your favor. The tailwind should be in your favor, because you cannot swim against it. Am I right? And therefore, this entire space, particularly renewable energy, the transformer-related space, the HVDC technology-related space, a metro capital expenditure-related space, this entire EMS space. So these are the very few, I would say, sweet pockets where the tailwinds are going to support you. The growth is going to support you. Of course, there can be quarterly volatility, but otherwise, the growth is going to support you. And that's where probably, at least we are positioned from the portfolio perspective. So capital goods is one thing which we like, and specialty chemical, which I've been saying from last 2-3 months, is another thing where we have increased. We are almost like 0% weightage a few quarters back, and from 0 we are back to 9-10% in last 2 quarters or so. So these are the 3 C's what we like. Capital goods, chemicals, and consumer discretionary. So these are the three C's. What we like from the portfolio perspective.
You added Swiggy lately, right, Rajesh?
Yeah, we would not like to disclose, but yes, you are right. We added Swiggy. It's a very small weightage. It's not a huge weight.
Okay.
And the primary reason, because we believe that one of the competitor in quick commerce, unlisted player, is probably getting more disciplined over the next 12 months. And if that happens, then clearly, the profitability will improve, which is the biggest, most important thing to track for in such business models. And if profitability improves, the yield improves, and if that improves, the entire, your numbers will change over the next 2-3 years. So, that's the reason we added this name in our portfolio.
Okay, all right. Thanks a lot, Rajesh, for joining in and filling us in with your take on the individual sectors as well as on the market themes. Well, by the way, before we slip into a short break, just keep an eye out on Vishal Mega Mart. There was a mega deal that took place today. The demand was extremely strong, and the stock all through the trading session has been that one that you wanted to buy on the dip. So from the time it was down close to 10%, now Vishal Mega Mart has made a mega move into the green after that mega block deal. So keep an eye out on that stock. Well, we'll slip into a short break, but as always, we'll tell you what's going on in dealing rooms in our special segment, D Street Chatter. Mitesh as well will be back to give us a buy or a sell call. Stay with us. Welcome back. Well, as promised, let's get to Nimesh, who's standing by to tell us what is he picking up in terms of D Street chatter. Well, Nimesh, the problem today is the broader markets. They have come in for a bit of a knock, though the headline index still appears to be pretty much in a range.
Yeah. So, Nigel, again, I guess it's more to do with the fact that there is so much of noise on the global front as far as the geopolitical risk is concerned. So that's going to have a impact on sentiment, at least in the near term. But do remember, today's fall is not backed by very large, institutional selling. So the volumes are on the lower side, is what I understand. Flows are mixed, but watch out for a large, the number may look large today because of the large Vishal megawatt block deal. I understand the almost 70-80% of the book was bid by domestic mutual funds. At least 3 or 4 large domestic mutual funds were anchor investors in that Vishal megawatt block. So the DI number could look very large today on the back of that large block. From a sector point of view, pharma has seen a bit of profit booking today on the back of that Trump tweet on potential tariffs. So that's having an impact on some of the pharma names today. But again, it's not backed by very large delivery selling, is what I understand. Technically, 24,800 is a first crucial support to watch out for. If that's taken out, then 24,400, 450 is the next level. But broadly, I guess today's fall is on low volumes. And also, as I said earlier, the DI number may look large because of that large Vishal megawatt block.
Okay, let's get to individual stocks then. Nimesh, what are you picking up today in terms of individual counters?
So the first stock on my list today is Keynes Technologies. I've been tracking this for a while now. We knew about the promoter block. That's done. And now I understand the QIP is very much around the corner. The company has actually confirmed to us that they are going to raise funds via QIP. I guess it's a 1,600 crore QIP, which might get open today, tomorrow. And there's a very strong demand is what I get a sense of. So Keynes is the first stock on my list on a potential QIP. Second stock is MGL, Mahanagar Gas. That's been buzzing in trade, one of the big F&O gainers today. Well, there was a Nomura upgrade in the morning, but essentially this move today is backed by very strong FI buying as well. So expect high delivery volumes, and there is a bit of interest back in MGL. The third couple of stocks where there has been delivery-based buying in the last couple of days, KDDL and RHI Magnesita. Actually, KDDL was up to almost 18-20% yesterday on very large volumes. I understand one domestic mutual fund has been accumulating both KDDL and RHI in the last couple of days. And the last one is Ogro Capital. Again, while the stock has been consolidating of late, understand there could be a corporate development very soon. A potential inorganic move by the company is something which the street is anticipating. So watch out for that in Ugro Capital.
Okay, all right, Nimesh, thanks very much for that. So that's basically stocks on Nimesh's radar. We'll keep an eye out on as well. Well, I think Mitesh is with us with what to buy or sell today for a reverse trade tomorrow. Mitesh, what do you have?
Yeah. On the BTSC side, I think on the short-term trade side, I have a STVT that's on JSN. It's just breaking below its averages. Last 3-4 days, the stock has been slightly in the downside, so we'll take a tight stop at 694. Look for 680 to about 678 kind of a target. And Kotak Bank can be a BTST with a stop at about 21.25 for target to 21.60.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's focus on another stock, a beaten, battered down stock, Zee Entertainment. From the peaks, its stock corrected to a sub 100 rupees. And earlier this year, you had the promoter entry that came in there and, chipped in there with some purchases from the open market. Yesterday, there was a big board meet and they are talking about pumping some money into the company. Interesting times. Vamakshi, fill us in with the details.
Absolutely interesting times for Zee Entertainment. Nothing short of entertainment when it comes to this, stock. The board has gone ahead and approved issuance of almost 17 crores fully convertible warrants to promoter group entities. The issue price for the warrant is at 130 rupees, which when we compare it to the closing price yesterday is at a discount of almost 4.5%. The promoters are looking to invest 2,237 crores in the company, and because of that, their shareholding is expected to rise to over 18% from 4% now. This in turn shows promoter intent, which is why this is a positive development for the company. In fact, Motilal Oswal believes that the promoter funding is largely being driven by recovery of dues of SL Group, which is somewhere around 600 odd crores. This investment from the promoters in terms of warrants could lead to an equity dilution as well, assuming all the warrants get converted into equity. 15% equity dilution can be expected. As far as the cash position for the company is concerned, nearly 25% of the issue price is expected to be paid upfront. Therefore, the company will receive 560 crores, taking their cash balance on an immediate basis to approximately 2,965 crores. So therefore, they're sitting on very strong cash. But the question then arises, what was the need to go ahead with the equity dilution? In fact, last year as well, in July 2024, the board had given an order to raise almost 2,000 crores via FCCBs, and only the first tranche of which is around 200 crores, was withdrawn. So therefore, that question does arise. But apart from that, what the street also needs clarity on is the utilization of funds. Now, of course, the board has gone ahead and given us a brief or a qualitative roadmap, but capital allocation is an important factor that the street will be looking out for as far as the entertainment is concerned.
Okay, all right. Thanks a lot for that, Vamakshi. So various question marks are there. A positive sign. But why do they need their money when they already have cash in their books? Will they convert it? Because you have an 18-month horizon now. And that explains why the stock, after seeing a big rally in the last few trading sessions, it's coming from profit taking. In fact, it's 3% off the high point of the day. Some uncertainties, with regard to how will this be done, and promoter funding as well. For the time being, stock more or less flattish. But Jay Bal of Cash Secures joins us on the show. Hi, Jay. How are you feeling about the markets? The last 1 month or so, we have absolutely gone nowhere, which is not such a bad outcome, because globally, things have become so uncertain. Where are we headed though?
That's right, Nigel. When the markets go sideways after the move, that's a consolidation. Now, the fact that the markets went up vertically from April to May, and then it's going sideways, it's a bullish consolidation. So there is little doubt over there. But with the short term, what is not completely clear is that did the Friday's low complete the short-term consolidation, bullish consolidation, or is there one more lower low? If the markets don't go below 24,300 support, I think the market could rally straight away above the June 11th high and then rally much quicker to all-time highs. But if the support of 24,300 were given, the market would drop to about 23,500, and then once again, the path to 29,000 from a 6 to 12 months perspective, in both these cases, in my opinion, remains intact.
Got that. In terms of, just get the stocks out of the way and then we'll get into other stuff which is moving around. Jay, what are your trades?
I have two positional calls, Prashant. The first is on ABB, again from the caps goods space where I'm quite bullish. ABB has already broken out, but the pullback recently is a bullish consolidation. So I don't think that the stock is likely to drop below 51.90. I'm anticipating the stock to cross somewhere about 7,400, if not, retest the all-time high. So now I'm being conservative. I'll assume it's going to be just a corrective rally to 7,400. The second stock is a conditional trade on TCS. If the sector rotation that's been happening in the markets is likely to spill into the IT sector, which is currently seeing a bounce already. If it is more than just a counter-trend bounce, I think TCS would be the candidate. About 35.50, TCS would complete an inverse head and shoulders pattern, and a stop loss of 33.50 would be essential, and that will lift the entire IT sector. So wait for the stock to close above 35.50. That will only then it will complete the inverse head and shoulders pattern. Until that, the pattern is complete. If the stock were to drop below 33.50 before 35.50, then this setup is invalid.
All right, Jay, the most talked about asset class in the last few sessions because of the geopolitical tensions has been crude. I think you had called out, right, that crude is likely to bounce from the recent lows. It's at around $74 per barrel mark. Where is it headed? Where does resistance come in at? And also the other asset class is dollar index. In uncertain times, you normally see the dollar index strengthen, which actually this time around hasn't happened. Where is that asset class headed?
Yeah, crude. We've been pointing out for crude to complete a double bottom and rise to $78 per barrel, and that's exactly the high it registered yesterday. And I think in the current run-up, the run-up of crude is done. I don't anticipate it to exceed the January high of 80.77, and I'm anticipating it to retest the April low. If the January high value exceed, then it'll signal that there's a major uptrend already underway. And we've spoken about this in my personal visit to CNBC studios. That from our 12 months to 18 months perspective, I'm anticipating crude to rally to about $170. So that will signal that it's already underway. I don't anticipate that to be the case. I'm anticipating one more retest of the April lows. When it comes to the dollar index, the long-term supports are about 96.5, 95.5. There's a reasonable possibility that the low it registered a couple of days ago, that could be a low. Still, evidence is pending. If that is the case, I'm anticipating the dollar index to rally to somewhere about 103, 104 as a short-term bounce.
Okay. I got that. So near term, Jay, on oil, on Brent, what's the view?
Near term, if you are very aggressive, you can place a stop above $78 and go short. It's a very aggressive trade, not for conservative trades. I'm anticipating a retest of $55 from a 6 to 8 weeks time frame. The time frame is slightly approximate. So I think the rise due to geopolitical tensions, that's done for the moment. So there is a pullback coming through for Brent. It may or may not break the $55, but it's proceeding towards that direction. We'll have more evidence as the commodity progresses.
Okay, 6 to 8 weeks in the 50s zone, basically, broadly, right?
Yeah.
And if that has to happen, then all this has to cool down. I mean, the actual real conflict also has to cool off. That's maybe another way to look at it. Jay, stay with us. We're going to take a quick commercial break here. Markets are still down by that much. Silver on MCX has hit a record high, and that's the latest. Silver, by the way, quietly posted a strong breakout, I think a week and a half back. And now silver prices are moving up to new record levels. We'll take a break, but maybe we can just quickly now also highlight US President Trump's latest post on Truth Social. And this is, I'm assuming this is, should we take a break? I think we'll take a break and then we'll come back and then get you some of what he has posted lately, I guess, on his flight from Canada back to Washington, D.C. Stay tuned. Okay, welcome back. 6 minutes and 30 seconds to go for market close. US President Trump, of course, has kept himself busy even on his way back from the G7 meeting in Canada back to Washington. And, a flurry of messages. And this one, of course, coming in on Truth Social, the social media platform, is saying, and I'm quoting, "I have not reached out to Iran for peace talks in any way, shape or form. This is just more highly fabricated fake news. If they want to talk," presumably he's talking about, of course, Iran, "they know how to reach me. They should have taken the deal that was on the table, would have saved a lot of lives." So that's what is coming through from President Trump. But of course, he said so much. It's, of course, very difficult to gauge what he's really going to do. Also, hear what he had to say while sort of getting off Air Force One after sort of leaving early from that G7 summit.
You just posted right before we took off that you're not leaving because of a ceasefire. Why are you? Can you elaborate?
Look at it better than ceasefire. We're not looking for a ceasefire. I didn't say I was looking for a ceasefire. That was Emmanuel, nice guy, but he doesn't get it right too often. But we're looking for better than a ceasefire.
What's yours only to get into this war? You're not going to involve the U.S. in this conflict. This state, you can do anything more for Israel right now.
Do pretty well. Right now we're doing pretty well. Remember, Iran cannot have a nuclear weapon. It's very simple. We don't have to go too deep into it. They just can't have a nuclear weapon.
Well, what is he thinking on the call for Iran to evacuate? Is there a threat or is there incoming? What was the thing around?
I want people to be safe. And that's always possible. Thing like that could happen. I just want people to be safe. Is there any new concern about U.S. troops for assets in the region at all? Should I rate people that know how to protect themselves? When you say better, we'll come down so hard if they do anything to our beat. We'll come down so hard that the gloves are off so beautifully. Now, I think they know that to touch our troops.
Are you sending the vice?
Yeah, I'm not kidding.
Do you plan to send the vice president and Steve Witkoff? There's reports that you want to send the vice president and Steve Witkoff to meet with the Iranians and have discussions. Is that something you're considering?
Not sure yet. I may. Depends on what happens when I get back. What specifically is better than a ceasefire? What are you looking for here? An end. A real end, not a ceasefire. An end. Is there something that will be permanent? Yeah, or giving up entirely. Is this okay too?
President Trump also signaling a new direction on trade, hinting at the possibility of sector-specific tariffs. Here he's sort of talking about pharma, perhaps, the next one which could get these tariffs from the U.S.
We're going to be doing pharmaceuticals very soon. It's going to bring all the companies back into America. All of them are focusing on. It's going to bring Houston back in, at least partially back in.
Jay, if you're a trader in the West, and you are a trader in the West, actually, you're in London, somebody would have invented some algo or something, right, to track all these comments, because he's the main mover.
That's right. That's right. See, the impact. I trade the Nasdaq quite frequently. In fact, I do it every day, and I do it on the 1 minute time frame. So the impact of his comments don't last beyond a few hours. So if you are such a micro trader, you need to have an algo, and they do tend to have a material impact. But I'm sure some algo traders have developed such trades. But the trend is supreme. Even in that 1 minute time frame, if you are having a higher time frame objective from a 15 minutes time frame, it still doesn't have major impact. The comments tend to have an effect in the direction of that trend. So there are algos that's running and they're working, and they try to fade after a few hours.
So, what is that? Taco.
That's right.
Yeah. Taco markets, taco traders.
Yeah. Taco and Mako.
What is Mako?
Musk also chicken sort.
Okay. Is that one? I didn't know that. Okay. Anything else on your macro dashboard which warrants attention? We talked about oil. Yeah. Anything else?
The most important thing is the US 10-year yields, Prashant, and that's been stuck in a range. And it's stuck between 410 bips and 466 bips until I'm watching for a breakout on either direction. And there have been specific comments that the bond market would crack and things like that. So watch 466 on the higher side. That'll signal a crack. If it were to break below 410 on the US 10-year yields, that'll signal bullish bond market and bearish yields.
Okay, all right. Stay with us, Jay. I think, post-market as well on Markets Forward, we have a few questions for you. But let's wind down trade then. Before we do that, actually, just pull up Vishal Mega Mart. Incredible move is what we have seen. The large trade took place at a sharp discount. And from there, it's recovered more than 10% from the low point of the day. So Vishal Mega Mart is the stock of the day, actually. 10% equity changing hands. And the street believes that this is a cleared out trade and things will move ahead from here on. Big demand out there. But in terms of the Nifty, we ended with a cut of around 100 points. Adani Enterprises, that stock was under pressure. Dr. Reddy's as well was lower in trade in today's trading session. Tata Motors continues to see selling. Even yesterday, it was one of the top losers. Today as well, goes home with a cut. What did well? Tech. Tech's been the space to hide. Tech Mahindra, Infosys, both of them did do well. TCS as well was up close to 0.5%. We have seen some very large trades on Asian Paints in the last few trading sessions. But that one, post those large trades, it appears it's prepared to move ahead. What did well from the broader markets? Plenty. Federal Mogul Gods, stock up close to 12%. Sterlite Technologies, stock up more than 10%. Happiest Minds, stock up 10% in today's trading session. Yet Supreme Petro as well, not a name we discuss very often, but that stock as well was up close to around 5%. In the last few trading sessions, it's been rallying quite well. So there are a lot of gainers from the broader markets. And Hitachi Energy, one would say it was expensive at 10,000, then at around 15,000. Well, in today's trading session, it was at around 18,500 odd. So plenty of winners actually from the broader markets, Prashant.
Absolutely. And as you said, lots and lots of movers coming through. Hindustan, some of the losers, Hindustan Zinc, Shipping Corporation, Jubilant Engraver, R Power, DB Realty, Hindustan Copper, Tilak Nagar, Prince Pipe, Aster DM. So yeah, enough action both sides. So very much a two-way market coming through. There's the flash at the bottom of the screen. I'm not sure whether this is coming from sources to see. Okay, this is sources to CNBC, and that flash disappeared. But anyway, 24,838 is where the Nifty is at, about 108 points lower, 0.4% down. Nifty Bank down about 230 points, 55,714 coming through as well. I think now we are finally putting this out. Sources to CNBC-TV18, NSE likely to have got the SEBI approval for Tuesday expiry, right at 3:30 after markets shut. That news coming through. We put out, of course, the story earlier, a couple hours back, that circular from SEBI is going to be coming out today. And of course, now sources are telling us that NSE is likely to have. NSE had applied, they wanted Tuesday, and they likely have gotten it. This is all source-based information until, of course, it's official in that SEBI circular. So this, in a way, confirms what we put out on the 22nd of May, which is the fact that NSE has applied for Tuesday, and that SEBI is actively considering NSE's request. So more on this with our colleague Yash Jain, who's been on top of the story. We'll take a quick commercial break here. Markets Forward with all the action in just a bit.